everyone to our April webinar. We are so excited for this time. We are so excited to have this again. It's been a while since we have had this online event. I know many are asking, when will you do your webinars again? When will you do your in-person events again? But right now, we're very much excited to drop in nuggets of wisdom, to drop in strategies. Esther has been continuously growing her skills, continuously learning more to be able to serve you more. And we just want to have all these new strategies. These are not new strategies, but as we grow, we just want to download that to you so you can use that to your finances again. So that being said, I would like to have you share, if you are a business owner, I would like you to share where you're coming from and what your business is. We would love to follow you online, on Instagram, on your website. We want to feature you on our pages as well. Who knows, there might be some collaboration. So drop your links, drop your business or where you're coming from down on the comment section, and we will feature you. We'll give a shout out to you as we go along. So to start tonight's event, tonight's webinar will be all about growing your wealth tax efficiently. It's the tax season, and we know, like, the tax burden we have as business owners. We want as much as possible to continue growing our wealth, but of course, making sure that it's growing tax efficiently, paying legally as little as possible with the taxes that we have for as we grow our wealth. So without further ado, I would like to welcome Esther as our main speaker for tonight. I'll add her on stage right now. Hi, Esther. What can we expect for tonight? What do you have for us tonight with our viewers, and what can they learn more from you tonight?
Welcome. Thank you so much, Camille, for the great work you've put this together. It's all because of the teamwork we have. And today is a very interesting evening because we have some questions that I want us to be thinking about as we go through this discussion. And our viewers today will actually be able to answer this question. For example, where does your money go after you spend it? Who really benefits most from the financing decisions you make? Is it you or the institution you put money there? If you had to finance your life over the next 10 years, how much interest would you pay? Right? These are some of the things that struck my mind a few years back, and I was thinking about, how can I understand how to create wealth and then do it in a tax efficient manner without losing much of my capital. So today's discussion is going to give you the power of taking control, how to access the liquidity. Because again, there's a difference of having a cash flow mindset and having a cash growth mindset or cash accumulation mindset. And today's session is going to help us figure out that and also share some statistics about what is happening about everything.
Okay, because before I pass to you the stage, have you filed your taxes already? Or I know this is like the tax season and the business owners extend up to like mid-June. So have you filed your taxes already?
No, not yet. I haven't
Not
done
yet.
that
Okay.
because I'm waiting
How
for June.
how about for the rest of our viewers? Have you filed your taxes already? And then what do you feel about your tax situation? This is not an accounting tax webinar. This is wealth webinar, and um, that's what we put on our marketing assets there. But it's tied to your taxes, right? As you grow your wealth, it's always tied to, it affects other areas
Yes, yes,
of,
yes. We
right?
have
The
to
tax always
understand that,
affects
yeah,
everything.
you have to file taxes. It's supposed to be like that. Where you are, you have to send a report. Just think about accountability. It's a way of also helping yourself be accountable. What did last year look like? Oh, so I
Yeah,
made this gross income. How much did I pay in taxes? So what is expected of me? And how much did I retain? So that's where you start planning and understanding where your income is actually going. So yes, filing
yeah,
taxes is important, and I would say is a mandatory thing for you to grow financial system in this place. You need to understand that taxation is one of the puzzles that
yeah.
comes with it.
And Yulia's done filing her taxes. So good job. So for me, I'm waiting until maybe mid-May to file to start doing all the other work that I need to do to file my taxes. But congratulations, Yulia. And how do you feel about your taxes? How do you feel about um yeah, your taxes? What do you feel about that? So
I
while we're
don't know
waiting for
anybody who is excited about taxes. But guess
but
what? It's
filing
it's
your, yeah,
it's a cocktail. When you think about it, it just helps because we are in a system where we get healthcare funded by the government. So we
yeah,
also have to realize that we have to be accountable. Without those funding coming in, how do you have your health taken care of? I'm feeling
yes.
awesome.
Okay, Yulia said she feels awesome because she paid
She
zero this
paid.
year. So maybe she paid right taxes throughout the year, that she doesn't have to pay extra at the end of the
No, she
year,
has a
right?
luxury of being a business owner,
Yeah,
so she has to spend first before she gets taxes.
yeah,
Lots of
yeah,
business spends. That's the privilege of being a business. When you're a business owner, it gives you opportunity to spend first before you get taxed. But everybody else has to be taxed before they
yeah,
spend. And that's something also that we tackle when we talk about your financial journey.
yeah. Okay, so
So
without further
anybody on
ado,
this call who likes to pay taxes?
anybody who likes to pay taxes. So while we're waiting for everyone to give their feelings about tax and tax season, I'll leave the floor to you, and we'll get all these nuggets shared with all our viewers tonight. So take it over. And I hope everyone, if you have questions at any point of the presentation of this insights that Esther's giving you, drop it on the comments, and then we'll go through it as we go along.
All right, so let's start off the session. Thank you so much, everyone who made their time to attend this session. It's always a great pleasure to be here with all of you. And today's topic is about some strategies that we put in place to help us plan, because it's very important to understand that in the wealth creation process, a piece of taxation plays a big role. While we are talking about taxation, I want to put a disclaimer that I'm not an accountant. So, what I'm giving out is educational information that relates to our financial planning. Any tax related question should be sent to your accountant professional. Okay, so again, this is for education purposes only. Horizon Growth works exclusively with CRA compliance structures. So our strategies help you in the financial journey, but definitely we collaborate with accounting, knowledge to make sure that people understand how those pieces incorporate into your finances. Just the way you're planning for your taxes, finance is also a topic in that. Okay, so we have strategic partners. Horizon Growth does not operate on its own. We have strategic partners that we place our clientele into depending on the situation that is happening with that client. Some of these companies have existed for many, many years, so you can check them out. So if you're looking for a strategy, we go through this. Next. So tonight's focus, we're going to talk about taking control of your finances. We are going to understand how we can access liquidity because, again, people talk about cash flow as a key. It's very, very important to have that liquidity access for the opportunity that arise over time. Also understanding the invisible taxation that you can utilize legally to grow your wealth. We also discussed a little bit about how you can create your own wealth warehouse by becoming your own banker. So, in today's session, we are going to be addressing the problems that are out there that people need to understand. Until you understand you have a problem, you don't really need any solution. It's just like I'm offering you a Tylenol and you don't have a headache. So how is that Tylenol going to help you? In the first place, you'll be wondering why she's even giving me Tylenol. So we have to discuss and agree that there's some problems that we need to figure out and then find a solution on how we can handle those problems. Now, the first thing that we are going to focus on in this webinar is understanding the tax landscape. When we talk about understanding the tax landscape, I want to take us more than 30 years back, okay, to be candid, in 1994. In 1994, the tax, everything was 100% tax-free when you do the investment. But then as times started going, we realized that the government shifted that from 100% profits to 75% taxable on capital gain and 25% tax-free. And then that changed. And when it changed to 50-50. So 50% capital gains are taxable, 50% are not taxable. And then we quickly had in 2024, the taxes had been proposed to be 66.7%, which did not, hold, but it's just painting a picture of what is going to happen with taxes. While we are now sitting at this level, can go to the next slide. We are sitting at this level, we know for sure the taxes are 50% capital gains and 50% tax-free if you're doing a non-registered investments as a business owner. Or if you're doing a real estate investment, there's also 50% capital gain in profits based on your current current tax bracket. So the question you want to be asking yourself as an individual is, will the taxes be going up or down? That's a question you need to ask yourself. Now, the government uses the taxes it collects. That's why we all need to file taxes so that we can have good roads, good healthcare, and everything that comes with it. But it uses that revenue to fund a debt. And right now, as a country, we are sitting at over 54 billion in debt, which every month, every week, the government is paying 1 billion in interest to service that debt. Now, can you imagine? Hello?
Okay, Esther, are you there? I think we have a little bit of tech issues on her end. There. Okay,
Am I having
we can see you
issues?
again. Yes, we can see you again. Okay. So we're talking about how the debt servicing for all of Canada's, I think that's where we got cut off. Um, all of Canada's debt, and how much are we paying every week, every month for servicing that debt?
Every week is 1 billion to service the debt the government has. So it has to pay at least 54 billion per year in interest to service
Okay.
the debt. And that is coming from the taxes we are paying. So the question is, if the government can pay 1 billion every week to only service the debt, when will that debt be paid off? And where will be the money coming
Mm-hmm.
from? There's only two ways the money can come out. It's either they increase the taxes or they reduce the spending. That's the only way to make sure that these numbers balance. Now, we need to position ourselves within a system to make sure that as it evolves, we evolve with it as well. And that reflects into consumer debt out there. Think about the credit cards people have, the lines of credit. When you do minimum payments, what it's doing is just servicing that. When will it get paid? So, as we talk about the wealth creation process, we need to really pay attention to how taxation plays into it. And it's both from an individual standpoint, a business standpoint, and now you can see the government is still doing the same. And that is also being done globally. That's why we have being imposed 25% on tariff, because everybody wants to balance the equation, but they're balancing under whose cost. It's very, very important to understand that. So as you think about what I'm just saying here, you start painting that picture even in your own financial journey, and that becomes a problem if you have no way out. There's things that we can't control. How much taxes we will ever pay, what the market will do with our investment. Those are things that are beyond your control. You can only control when you want to retire, how you want to retire, how much you want to have in your retirement. But the money you have in retirement don't reflect. You have no control of how it will reflect, because it will reflect based on how the market will play. So taxation is very, very important when you think about that. Next. Now, it's also important to understand the power of compounding. Now, I can't emphasize enough about compounding, because compounding happens in every aspect of life. If you are looking to build your good health, then you need to compound on the exercises you're doing. That body will come out with continuous focus on how you do it. When you think about creating wealth, it's the same process. It's the little pennies every single time that compounds consistently over time without getting disrupted. And sometimes when you get asked, Esther, if I pay you $1 million, for example, every single month, would you go for that? Or you want the penny every single day? Most of us will take $1 million a month. But the person who takes one penny every single day, the end result is an eye opener. Because in the first 10 days, you don't see much. You just see 1 cent. So, what is 1 cent? But it's consistently compounding over a period of time. Look at day 10. This person has only $5.12. The other one ran with 1 million already, or they're waiting end of the month to get their million. Day 15, this person doesn't show any results. Maybe 163. What is that? How can I work 15 days and you pay me $163? Now think about day 25. This person is clocking in 167,000. From that penny we started day one, the power of compounding, my friends. Now think about day 10. While you're collecting your 1 million, I have 10 million. But how did it start? It started with that 1 cent. So again, what we are trying to unravel here is to understand and visualize things long term. The immediate gratification sometimes overshadows what time can do. And that's why we give this example to help people understand that it doesn't matter how much you start with. What matters is the consistency of what you want to do. And when you're compounding like this, you need to understand there's an effect that comes with it, where we call taxation, because everything will go through that process. Any penny you earn is taxed. Anytime you spend, you get taxed. Anytime you save, whichever vehicle you're using, it will be taxed. Some vehicles are being taxed more than others. So you need to also understand, where is this compounding happening? Is it happening in a tax efficient vehicle, or is just compounding? Because somebody may have a penny compounding in a structure, for example, a registered retirement plan. When this compounding is happening for a penny, then the 100% taxation is deferred. The results are going to be different from someone who is playing the same game, let's say in a tax-free savings account. So again, when we talk about planning to do things in a tax sensitive way, you need to plan a vehicle that really, really works for the purpose of what you're doing. So again, visualize long term and remember the power of compounding. Do not underestimate that penny, because that penny can build millions for you if you stay consistent. Next slide, please. Now, I just want to give this example of how time beats money. Alex starts at age 25 with $5,000 a year. He invests for 10 years between the ages 25 and 35. Then he stops. Adds another dollar, then it compounds, for example, at 8% until age 65. This person has only invested 50,000. But at age 65, they have over 600,000 if they are using a compound interest calculator. On the other hand, Jordan starts at age 35, saves $5,000 a year, invests every year for 30 years, between 35 and 65. He doesn't stop contributing. He's very loyal to that. He has done 150,000 in total within that 30-year period. Why is it that his investment is less than what this Alex did? Because time beats the money. The best time to start this process was 20 years ago. The best other time to start is right now. So if someone is still on the fence figuring out, when do I start? I do not have what it calls for. Let me get another job, or let me stabilize my business before I start. That will put you behind, even when you work so hard to the finish line, because time is of an essence here. Without time, money cannot work for you. It needs time to compound. The question is, do you have enough time to let it compound, to resolve? Because it's not 150,000 you need, for example. With less and more time, it grows over a period of time. So that is a lesson from this slide. The example that comes next is actually what taxes cost your family. Now, if someone invests 50,000 at 8% in a tax efficient way versus having a 30% annual tax drag, I like the way they call it. If you have this that is not being taxed in a tax-free account, this is the outcome. Just an example. In 10 years, up to 40 years. But because we have a tax tagged on it, look at what is eroding here. And I'm using a 30% tax bracket as an example. I am using these numbers to help you visualize how much taxation plays into your financial stability. And you see, it also plays into a country being called a developed country, because it's from that taxation they collect that they are able to make systems better for us. So while it's working, it could be working for you or against you. Which side are you? We are doing this to help you understand when you do your next financial planning, you need to be able to intentionally seek vehicles that will help you invest in a more tax sensible manner, because you could be doing the same thing, having different results. Look at how much is lost over a period of time because of taxation. The other thing I also want to emphasize in this webinar is when we think about an apple tree concept. And the reason I want to use an apple tree is because we save money, we do a good job, but then disrupt the process along the way. And I want to use an apple tree to paint that picture. Now, let's assume a farmer is given an apple tree seed to plant. It's going to take a long time for it to even sprout from the soil because it's fighting for its life. You had to hide it in the soil, and then it has to pop out after you water it and give it the right environment. Now, as it pops out of the soil, it's the responsibility of the farmer to make sure that they keep nurturing that plant that has sprouted into a tree. And then that tree should be able to produce fruits, whether it's a mango tree or an apple tree, it doesn't matter. The process is the same. Now, let's say that farmer has done that good job and it's time to harvest. There's only two options. You give that farmer, you tell, okay, here are your apple fruits. They look so delicious. You want to harvest them? Take a ladder, go up, get the tree, get the fruits in a basket, come down. Or cut that tree and get all the apples you need. Which way would that farmer do? If you are that farmer, can you post in the chat and tell me how would you get the fruits out of the tree? Are you going to climb, get them, come down? Are you going to cut it? And why? Could someone tell me in the chat what they would do with that situation? Anybody? Camille, are we getting those responses?
We're still waiting for them.
Okay,
It
while we are
takes a
waiting
little
for
bit
them,
of lag in between, yes.
okay, so think about it. When you cut that tree to get the fruits, that's it. You enjoy the fruits, you sold it, maybe you made good profit, but how are you going, how are you going to keep it sustainable? You have to restart. Plant the seed, let it sprout, then water it, then do the same. Most of us have a big purchase we do every single year. It could be a trip you want to go to. It could be school fees you're paying for your children. It could be a big renovation. It could be buying another property for rental purposes. Are you saving money for that thing? When that aspect is done, you go back and redo it again. How do you plan your vacation, Camille? You're going to Philippines in the next 12 months and the trip is going to cost you 12,000. How do you plan for that? Tell me. How do you plan for
Okay.
your trips?
In the usual, what we do here, we would be to save up, right? To save up money to buy the tickets, and then when you buy those tickets, you save up for pocket money and for your expenses there. But the thing is, like, to your point, once you use those savings, they're gone. If we put that, say for example, we're putting it in a TFSA or some form of investment, that's giving us interest. But then if we take it out to buy our plane tickets and to spend on our vacation, then all of the opportunities for that to grow, that also gets taken away. But
Good.
that's what we know to be doing, right? That's what many of us are known to do. It's like either you save up or you borrow money from whatever access that you have to be able to have these big expenses fulfilled.
Good.
But I like the concept here where it keeps growing and growing, even if you're taking down the fruits of your labor, right? You're taking it and using it and consuming it. And that analogy of I've worked hard for this and I'm able to enjoy some of these fruits, but I know in the next couple of years it will give me fruits again.
Good. So, what we're trying to paint a picture here is there's a problem in the society where we have two kind of mindset. A mindset that is scared to finance and a mindset that purchases things for cash.
Mm-hmm.
Okay? If I tell you both opportunities are finance, people fight and say no. Because in both opportunities, there's a risk. When you finance something, you're paying someone else interest to use their money. When you're paying something cash, let's say you buy a car cash, then you
Mm-hmm.
lost all the opportunity that would have purchased you anything except for the car that maybe depreciates too. So if I tell you there's a strategy we have, or there's a strategy we educate our clients on how you can still go for your vacation, you can fund your lifestyle while keeping the compounding going. The idea is to leverage your own wealth warehouse. Would you be interested to understand how the consistency of growing the apple trees so that it gives you fruits this year, the next season gives you fruit without you going through the process again? It's painful process. And once you understand that you can still fund your lifestyle, you can still go for your vacation, you can still have the investments running while keeping that opportunity in your own hand, taking control, that is what we do. And those strategies are meant to help you contain your own financial muscle in a way that if someone is taking your time away, for example, if you're working for someone, they already have control over your 8 hours every single day, and there's nothing you can do about it. Unfortunately, if you have a business that is consuming your 8 hours, it's already consuming your 8 hours. But yes, it's giving you an income, and you're giving that income to a system or somewhere that also takes full control of it. And then what? Someone is controlling my time and my earnings at the same time. Where am I? Am I just a person to go and get it and someone else control it? That's where our conversations begin. That's why we sit and discuss what can we do? What is the situation? So this is a very important concept to remember when you're planning on your financial journey, that this is key. As much as you do those pennies, make sure those pennies grow uninterrupted. Because when you interrupt the process, you restart. And that's what you don't want to do. Because time doesn't wait. Time is not on your side. Once you start, you let the system compound so that it can produce the results it's supposed to produce. Next slide. Now, let's talk a little bit about the flow of money. I spoke about that already. We earn, we spend, sometimes we borrow, and we have to repay. It's just like, like I earn today, I spend tomorrow, or I don't have money, let me borrow and pay back. So it's just like some kind of roller coaster. Everybody's doing somewhere. The thing is, the income allocation, where does your money really go? Is it productive, expenses, saving, protection? Or is going to the lenders who you consistently borrow and you have to repay back? Now, debt is not bad. Don't get me wrong. A debt that is meant to create wealth for you is a good debt. When you're borrowing money to do things that do not create any income is a problem. I borrow money from Camille and I just go and buy a car. What is it going to do to my finances? Let's say Camille is the bank. I borrowed that money. I went to buy the car, and God forbid, after 5 days I get into a car accident and it's written off. And now the car insurance is saying that car that you bought 40,000 is worth 20,000. And that's what they're paying you. First of all, you have Camille's debt. Second of all, you have a deficit to even capture it. Then what? It's an accident, but it happens. Because we can't control what life does, we can only control how we handle what life throws. But those are some of the balls life will throw at us. And that's why we are here, to think about a broader aspect that, yes, these things happen. So, how do I position myself in a way that when the balls are being thrown, how do I come back? Because life will throw you off. But the good thing is, always I tell people, when you fall back and you can look up, you can always get up. But you really need to have a strategy to get up. And that's why these sessions are important. You know, otherwise somebody will commit suicide. Someone will be depressed. Like, I lost everything. Then what? There's always a better tomorrow. There's always a second chance. But you only have that mindset when you know what you need to do when that situation comes. You stay calm and work out your way. Okay? So next. I talk about wealth eroders, and that is very important to understand, that you work so hard for your money, whether it's coming from your business or it's coming from an income. You work so hard. Some of you stand 12 hours, 16-hour shifts. Some of you have to get overtime because you didn't get a replacement. Then your knees are hurting. Some of your backs are hurting. Some of the eyes are hurting because we sit on the laptops to work from the screen. I have to use reading glasses. You want to make sure that as you work so hard for your money is also working so hard for you. And these four things that I'm talking about here are key to understand, that the interests paid to institutions, some of it is in terms of fees, erodes wealth. So when you do investments, make sure you understand the fees that come with it, the interest payments you are doing. Is it a compounded interest payment or a simple interest payment? In most situations, when we keep money in institution, they give us simple interest as a way of incentivizing us to accumulate that so that the institution can use it to create wealth for themselves, right? Because then I will have my savings account, your savings account, everybody has their own savings account. I have 4%, 5%, whatever they are offering. But that accumulation plays a bigger role in compounding into something bigger. The question is it compounding to favor you or to work against you? And then there's things like inflation. You have no control about the inflation. You have to understand that every time you put your money away to work hard for you, is it beating inflation, reducing taxation at the same time? Ask yourself, if I remove taxation, inflation, this percentage, and I remove the taxation that comes with that profit, will I still have profit? If the answer is no, then you need to reevaluate where the money is being saved. The opportunity cost, I spoke about people who buy things on cash. Because if you're used to buy things on cash, then it means you have to be saving that cash to accumulate it somewhere, then you can purchase. So the cash accumulation, while it may look like a great opportunity, if someone asks you, if you save $100 every single month, when will it become $1 million? Let's forget about any interest. For you to make that $100 to become $1 million, in cash accumulation phase, it will take 833 years to save $100 to make it $1 million. That is without investing. How do you reduce the time? Okay, let's say you save $1,000. $1,000 every month? For how many years will it become a million? 82.3 years. And if I start, I'm 40 or 45, and then I add 83 years on it, how old will I be? Do I even have teeth to enjoy the million? Right? So if I wanted to compound in a shorter period of time without, let me just talk about without any interest, then I put 10,000 every month. That way, at least I can reach a million in 8 years, 8.3 years. But how many people can afford that? How do you get there? First, it's the power of compounding, uninterrupted compounding. Remember that penny example I gave you? It was only 30 days. But consistency, uninterrupted, compounds into something bigger than you think. Now, 3 beliefs that quietly hold people back. Myth number 1, pay cash, avoid debt. I just used that example with Camille. And as good as it looks like I don't have any debt, when that happens, the question is, if an opportunity come today and I just use that cash to buy a down payment house, the pocket is empty, I need to refill it. Are you avoiding any debt? Saving and investing, I am fine. People think that way. First of all, you need to know the difference, because saving and investing, they're not the same. That's why when you sit down with your advisor, you need to make sure they understand what you're saying. Esther, I want to save this money for my emergency is different from Esther, I want to invest this money. For what and how long? In what? What is your risk tolerance? It's very important to understand that. Myth number 3 here says, pay off mortgage as soon as possible. Now let me ask somebody on this call. If your house is worth 500,000 and you pay it off today, will that change the value of the house from 500,000 to 1 million? If the answer is yes, put it in the chat. Paying off a house early does not change the value of the house, and it doesn't change the market trends. If anything, paying off a house early is good for some people, but some people have a different mindset. It depends with what you're thinking, because mindset is everything. If I pay off my house today, I am happy I don't have no debt, but I have no savings. But let's say tomorrow or the day after I lose my job and I'm trying to take equity out of my house. I call it my house because I paid it off. And then I'm told you don't qualify. Then what? What? Because while you think you paid it off, you have to be approved to take money out. So as you plan to do certain things, you need to understand the risks that come with certain things. I'm not saying this is good, this is bad. I'm just painting a picture of a scenario that could come up. If I have assets without cash flow, some people are rich in assets, poor in cash flow, then if you have an opportunity that requires an emergency attendance, what do you do? If you want to sell your house, maybe the market is not good, but you have a pressing need. So then you sell your house at a cheap price because you want to deal with this. You're not thinking, your head is not thinking at that time, I want to resolve this. It's an issue. So again, as you plan those vehicles, you really need to understand what works where. Diversification is very, very important, because every vehicle you use has its own pros and cons. Whether it's giving you a tax benefit or it's causing some deficiencies in wealth creation process, it's very easy to create, to grow, accumulate, sustain. But if you can't transition it in a tax efficient way, you still failed the process because it won't go generations to come. It's going to lose somewhere. You're going to lose something somewhere because something was not done properly. So while we are creating it, we need to make sure that we understand what we are doing, in which vehicle we are doing. Is it a retirement plan? Is it a tax-free plan? Is it a capital gain taxable plan? Is it a tax free plan? Which plan are we doing it? Because growth will happen everywhere. But how do we take off that growth is very important. So as you read this myth, you tell yourself with your situation. For some people, it works. For some people, it doesn't. That's why in financial world, there's no one fit all strategy. It is customized all the time. Because what you want to do with your finances is different from what someone else wants to do with their finances. And we really need to sit down and talk and understand that. Okay? So some of the tax invisible strategies is keeping your money within the compounding process while getting that privilege to leverage. That gives you full control. I got this opportunity. It's a phone call, 3 days. I can access what I want. Do you have that strategy in place? Let's talk about that. Right? Because life, I don't know. Okay? Controlling your capital, true wealth is access, control. Many people are asset rich but cash flow poor. Real freedom means directing your money without triggering unnecessary taxes. Sometimes somebody has an advisor, they did a plan for them, and then they want to just do some kind of quick life decision. Sometimes that decision may be as simple as maybe you open a first home savings account and you didn't buy your first home, and now you can't take out that money without paying taxes. You have to roll it through the RRSP, for example, and now you'll be very upset. The advisor or the company or something. Nothing is wrong. It's just the policies around that vehicle you used states that particular vehicle can be used in this manner. If you don't follow that, it's gonna have some consequences, and some of those consequences will be severe to affect your financial journey. Someone open an RRSP to save just to defer taxes, to get a tax refund, while their income is not at that par. Now they locked their little income they worked hard for to go now get taxed both the seed and the crop at an expense of waiting for a 2,000 tax refund. What are we doing? You're trying to catch this and lose this because that conversation was not done. And there's nothing wrong with that. It's just that, is it a strategy that will serve the purpose at that particular time? If the answer is yes, go ahead. If the answer is I don't know, seek help. Find out from someone. How do I reduce my tax exposure legally? There's different vehicles of investment, as I talked about. You can use whichever one. All of them are great vehicles. But the question is, which one works for you, for the situation you are in, and for the purpose you are trying to achieve? Does it serve that purpose? If you're not sure, seek help. If you're sure, yes, go ahead. If it's no, it's no. And it's okay. You don't have to do what everybody's doing, my friends. Just stick to your game plan. Because there's so many routes to go somewhere, but you need to stay focused on your situation and grow it step by step. If it's a debt, step by step out. If you're out now and you want to do the next step, slowly get out. With your strategy may not work with another person, even if you're earning the same income, have the same number of children, live in the same neighborhood. It's always different. Something is different. And I want you guys to understand that making your own goal, financial goals to help you plan. It's something that you come up with. Sit down with a profession and tell them, this is what I want. You tell the architecture which the house structure you want. They will tell you, okay, so to try and put what you were telling me on paper, this is what I'm drawing. Does this make sense to you? Because again, they are drawing something from what you're telling them. It doesn't mean that what they're drawing is correct. They still have to confirm. Did I get you right? Is this what you mean? You say, no, 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 I wanted this. No, this. That's what is called inclusive working together. Having that holistic, client-centric approach is very important. Because by the end of the day, it's not about what I think you need. It's about what you really want. If you want a vehicle that will help you this is what you really want, let's get you that. But I have to first educate you on what you're getting yourself into. Next. So the tax invisible strategy doesn't just minimize your taxes. It's structured to protect your money and all the wealth eroders. Because some vehicles are too harshly taxed than others. The pain of losing the opportunity cost and the inflation that comes with it. You need something that gives you a peace of mind. When everybody is heckling out there and everything shows red, I have a peace of mind. What is that vehicle? What is that strategy that I can use to have everything I'm looking for? That's a conversation you can have with your advisor. That's what we do to make sure that whatever you want to do suits you and creates that invisible umbrella around your hard work. Next. So can you use your money when needed? Does it keep growing while you use it? That's something that we really need to understand. Control is everything. You lost your time already. Time is not coming back. And there's no price tag you can put on time. People say time is money. No, time is more than money, because when time is gone, it's gone. You can lose all the money. You can make more anytime, but you can make no more time. It's gone. So we need to make sure that we value the control of what that time got wasted doing. Because you can redo everything, but you can never capture what you lost in time. Because you can't capture what you lost in time, you better take control of what you have. Because whatever size of it, whether it's a penny, a dollar, or more than that, is yours. Take control of that. Embrace it. Love it. Take care of it. That's the only thing that is left between you and God. That's a piece when you call yourself retired, you're going to take home when all is said and done. That's the only thing that is left in your arm to transfer to the next generation. That's the baton you have to give your child and say, Mommy works hard for this. That's a legacy. You don't play with that. That's gold in your hand. You need to nourish it. You need to embrace it so that it can compound and take care of you, because you took care of it. Into the cold you woke up. The weather was bad, you went. The work conditions were not favorable, you pursued that. Then you achieved this. Why can't we take some time and think about what we have achieved? How can we move it? How can it work for us? How can we deal with that so that I can say, okay, this is what I got when all is said and done? Because retirement is some sort of palliative. When you think about retirement, someone is just saying retirement. Someone is giving you pension to retire. Like when you retire, that pension will take care of you. Like in those palliative, like we need to enjoy it as we live. How do we do it? I may not have teeth when I retire. I may not have energy when I retire. Why should we wait when I retire? Why can we not do it now? Those are very disturbing questions that we need to think about. And remember these three things: tax deferred growth, tax efficient access, or estate benefits. Before I close, I just want to go back and re-emphasize, as a farmer, you planted that seed, which is the little thing you got left with under the soil. It disappeared from your bank account every month. What did it bring? What accountability? You kept going, and I kept going to work. You took this one from me. What did it create? Were you that person who was doing that and disrupting it, cutting the tree every time? Suppose you cut the tree today and they lay you off tomorrow. Then what? Suppose you cut off the tree today and you are critically ill or you're disabled. Then what? Suppose you left that apple tree standing in your compound. You can send someone, look, I am sick. Can you go on that tree and get me some fruits? Because you didn't disrupt it. The power of compounding is unmeasurable. It compounds in everything. Your taxation, your cash flow, your savings, everything compounds. So make sure it compounds to your benefit and not against you. Any questions? Any questions? Most people are not behind because they don't work hard enough. They're behind because no one ever showed them a better way to do that. Will you continue doing what you have been always doing, or you start positioning yourself and your family to create the future you want for your next generation? What is the takeaway? Can you tell me what you took away from today's session?
So that's a very good insight there. Hey, so one of the things that, and you've shown the myth and what people is what are the things holding back the people. It's usually that we're used to doing one thing, and change is uncomfortable. That's why we'll kind of like just settle in here, as opposed to find new ways of doing things that we know would benefit us more. And even that waiting, right, that a penny that doubles a day, it's very slow. And the growth, sometimes you're halfway in, you've spent time putting in your savings, investing, working out, and you don't see it right away. But at the later years, as you go on, that's when it becomes more noticeable, right? That's when the the bulking of muscles come in. If you're working out, that's when the growth of your money would be more noticeable and more impactful. So yeah, share with us one thing that struck you from tonight's session. I think for me, that's one of the biggest takeaway. It's that compounding effort in everything that we're doing. And I know we're talking about like how do we grow our wealth in a tax efficient manner, right? But then growing that wealth, it entails doing things consistently and then having the right strategy, working with the right professional to make sure that the money and the effort that you're doing, it's it's setting you up for success, right? Same with finances, same with working out, same with the skills that you're building. You're working out, you're gonna be faster in achieving the weight and the body structure that you want if you're working with a coach.
Yeah.
Same thing with business. You're going to be growing faster if you're working with a professional. And same with your finances. You're going to be set up for what you want to achieve, and you're going to be there, more tax efficiently. You're going to be there faster if you're working with a professional. Not just a professional, but the right professional for you. So I have someone here. My takeaway is that the debt servicing of the Canadian government make me wonder what our country is doing with paying its debt and tax impact on us too. I think it's all the way back to the start when we discussed the billion a week tax servicing. So that's a lot. And it all goes to how do we pay that? We pay that, right? So we benefit from that, but we also pay for those things. I realize now that I did something right and unfortunately some things wrong. What can you say about that,
So
Esther?
the thing is, there's nothing we did wrong. The good thing is, it's called realization, right? We don't know until we know. And now that we realize this is a strategy that can take us somewhere, it's a very good place to start. And just acknowledging that, I am swimming in debt, or I was paying things by cash and losing opportunity cost, or my leverage strategy was not good, or my wealth creation journey is leaking. They say when you have something happening, you need to check on the leaks. So, which leaks do you have? Is it a tax leak? Is it a fee leak? Is it an inflation leak? What is it? Is it a cash flow issue, or is a cash accumulation issue? Some of us have that mindset to accumulate wealth, accumulate cash. Cash accumulation is not wealth. Because think about how long it will take you to make that 1 million by keeping $100 away. But when you are doing a cash flow strategy where you leverage, money needs to move. It comes in, it gets channeled into something. And that is the biggest way to get everything loading. So thank you so very much for everybody's time. Share your comments and let us know how we did and what we can do better to improve these sessions. I think she will share a key code. Please give us a feedback. And again, it's a learning process for everyone. You can reach out and schedule a time where we can discuss how those strategies can actually fit into what you're doing. Or we can have a free complimentary review of what is happening with your planning, and we can recommend some things. If it's a strategy that you've done that is working for you, great. What can you do to improve it? There's always something that you can do. And remember to evaluate everything you do. Today you do something 2026, make sure 2027 you sit down with your advisor and check, because the income you made in 2026 and things that happen in 2026 may change in 2027. So you want to make sure that your strategy is aligned with your goals. And how do you do that? You keep evaluating. You don't do something and say, oh, I did that. And then 10 years later, it's like, okay, you didn't have any kid. Now you have kid. There's no beneficiary that you have no updated will. You didn't do your estate plan. Like things are everywhere. So make sure that you do a continuous evaluation. Oh, I got this child, or my business has expanded, or maybe I'm downsizing, or something. So to make sure that everything still stays and aligned to your initial goal, because you need to be growing. What is not measured does not grow. So you have to measure. You have to measure your net worth statement. You have to measure. If you are negative today, measure it. Tell yourself in 3 months, I need it to go to $2 or $10 or 1,000 or something, so that you push yourself to climb the ladder. But if you don't even know it's negative, how do you even measure and work towards that? So don't be afraid to look at it. Look at it. Say, yes, here is where I am. So where do I start? Start there and measure it. You'll thank yourself you did that. Thank you very much.
Thank you. And if there is one step that you're going to take after tonight's session, that is to scan this QR code, give us feedback. And at the end of it, if you want to book for a private session with Esther, this is complimentary. This is going through, okay, what are your goals and stuff like that. And just reviewing what you have. It's not, there's no obligation to do anything, but just get a more insightful conversation with Esther that is more geared towards your own situation. Every situation that we have is unique. Every goal that we have is unique for our family, for ourselves. So scan it and give us your feedback, and we'll reach out to you if you ever want to have that private session with Esther. This is complimentary. You don't have to pay anything. And yeah, thank you so much for being here.
Remember to file your taxes, everyone. It's important
Yes.
for the government to run. That is an
Yes.
accountability that you need to do. If you're a business owner, make sure that you prepare your receipts of expenses and everything to get processes done. For individuals, make sure you file your taxes before 31st of April, right? I believe that's the deadline. Is it 31st of April? Make sure you make sure you file your taxes. If you are going to get a refund, the government doesn't mind if you file it later. But if you are supposed to pay and you file it later, the penalty will come with it,
Yes,
right?
that's gonna
So you
have
always need
penalty.
to file your taxes on time, and then plan accordingly for next year, right? So start
Yes.
keeping what you need to keep aside to make sure that you're not running the last minute. So those are some
Yeah.
of the tips. Make sure that you get, if you're getting the employment, you know what you need, to get yourself the TFOs. If you didn't get the TFO, call your employer to get that, and make sure that you keep your records clean, because CRA audit is everybody's nightmare. Whether you're a business owner
Yes.
or an individual, it takes so much time and energy to go back. Let's do it right the first time. So again, put your things together and get them right. And if you messed up this year, it's okay. There's always a second chance. So just make sure that you work out things to make next year a great year for us, right? So thank you so
Yes.
much. God bless everyone. We'll catch you
Have
up
a good
on the
night.
next episode in May with God's grace. Bye for now.
Yes. Okay. Bye, everyone.